Welcome to Beyond Wealth, Success Unscripted with Matt Calnan. Discover the personal drive, professional journeys, and business strategies that have made a real impact. It's success from the inside out.
Welcome back, everyone. Today we're chatting with Jordan Reiter. Jordan is a financial services professional helping people advance their financial position. Jordan, do you want to start off by maybe telling us a little bit about yourself and what you're doing?
Sure. Thanks for having me on, Matt. I'm excited to be here. Myself, I'm born and raised in Lethbridge area, about half an hour to the north. Picture Butte, Iron Springs. Grew up on a farm out there, actually a hog farm, which was a very interesting business to be in. But about 15 years ago, our family sold that, and I don't think it was going to be my thing to begin with. But I've got a beautiful wife, and we have a 4-year-old son who we've had for 2 years now. We actually adopted him, and that's been an amazing journey. It's really, really awesome being a dad. And found myself in the financial industry out of college. So a little bit more background. I was kind of a career college athlete. I was a basketball player, in and out of school a couple times, working here and there. And then by the time I was about 26, I was finally done with that stage, and I moved into the banking world, did commercial banking for 3 years, and then came on an opportunity with where I'm at now to kind of run my own business and help people with their finances on an individual basis, which has been incredibly rewarding. And here I am today.
What does that look like? Like when you're helping somebody on the individual basis, what are you doing with those clients?
So really what we bring to the table is more common sense principles when it comes to finances. I think that our education system is not really helping people in that department. I'm sure most people would agree with that.
I don't think anybody's going to disagree that our education system, and then that's probably Canada-wide, internationally, all of that.
I believe so, yeah. So it's more just introducing people to common sense approaches that can help them move towards financial independence, right? We're in a stage now where retirement is not in a very good position in our country. There's a lot of people struggling financially. So if we can instill some really good principles, especially when people are younger, I mean, it applies to all ages, of course. But if we can instill some good behaviors and principles in people, I believe that pretty much everyone can get to a point where they're financially secure. And it's not that complicated. It's pretty simple, right? There's a whole lot of ways that you can build wealth and retire comfortably, but the common sense approaches is what we really focus on.
Yeah. So would that's investing, financial planning? I assume there's an insurance component in there as well.
Correct. So, with our company, we're a full service brokerage. So we do deal with different types of insurances, specifically focusing on making sure people have the right kinds of insurance, life insurance and things like that, and use that as a protection or a bridge to eventually, not need those things when you build enough assets and enough wealth to be financially independent.
Right. Jordan, I think you know this about me, but you still came on the show, which is good. I'm not a big advocate for financial planners in general, and as an industry, I think it is fairly predatory, and it's tough to find good financial planners who are like moral and ethical. And I'm sure they're great people, but it's just the industry is very much based on compensation that steers you away from the client's best interest sometimes. So how do you make sure that you're going within the bounds? And by the way, for those that don't know, I do know Jordan. He's a great guy. He is one of those guys that I would recommend people go and talk to. But how do you, as a potential client or as somebody that doesn't understand this industry, how do they find somebody like you to be able to go and give them that advice?
That's a great question. I mean, I would agree with you. And I think part of what drew me to the industry was that fact is that, there's a lot of agents and a lot of advisors out there that do take that approach where it's more based on compensation and things like that. And of course, we have to get compensated for what we do. But I think the biggest thing that separates us is it's going to be more of a solution-based approach. So, I'm not specialized in one specific product that I'm looking to sell. It's more taking a look at someone's overall situation, and we have where they're at. We have, whatever financial independence is going to be. So we're going to set some goals for them as far as where they need to get to. And we want to move all those components in that direction, right? So sometimes that means they don't need certain things, but they're going to need more of another thing, right? So we're just taking all of these pieces and we're trying to put people on a path towards, their ultimate goal and in the most efficient way possible.
So if somebody was looking for an advisor, or if they had an advisor and they wanted to really make sure that they were being taken care of, what are some of the things that they should be asking that advisor for?
They should be asking, a lot of the industry is very product based, right? It's more about selling someone a specific product. And I think of life insurance. That's a big one to ask about, as to, if they have a life insurance policy already, why do they have that policy? What type of policy do I have? How much am I paying for it? Am I overpaying? How long is it lasting for? And we've talked about this before, Matt, but I think that life insurance is one of those things that should be kept as simple and low cost as it possibly can, right? We have to factor in how long people are going to need it, right? But at the same time, there's a lot of people out there that are really, really overpaying for that. And that's hurting their overall financial situation when they get to retirement, right? And you can do your own research on that. There's lawsuits out there from, these policies that were sold in the 80s that they were promised to be retirement plans, right? And it turns out they've all collapsed. So there's multi-billion-dollar lawsuits out on that. I don't think that should be, a major component as far as building wealth. I think it's just strict protection. That's my opinion. And the numbers do back it up if you run those out. And then on the investment side, there's if you're looking at mutual funds, for example, right, there's multiple thousands of mutual funds out there. So people don't know what they should be in or what they should choose. The reality is that almost every company that deals them has funds that are going to get people where they need to go if they have the proper behavior, right? So it's very much teaching people what those behaviors are and how those can benefit them long term. And we spend, with each client, we're going to spend multiple hours going through that education and specifically focused on the behavioral side of it, because I believe that ultimately is what's going to get people to where they want to be.
Well, from a high level perspective, what would those behaviors be that you're looking at? Is that spending habits? Is it investing habits?
There can be a whole number of them. We focus, when it comes to specifically investments, we focus on 4. The first one is essentially make sure your money's diversified properly, right? So whether you're just investing in mutual funds, or if you have real estate or whatever other wealth building tool you're using, make sure it's diversified properly in an efficient way. The second one is discipline, which I find people struggle with the most over time.
Yes. Yeah.
I'm sure you'd agree. But essentially, without digging into too much detail, it's making sure that once you're invested properly, to make sure you're staying invested, make sure you're not trying to time the market and do all that kinds of stuff, because nobody can do that. If you find an advisor that thinks he can, you should probably run away.
Yeah.
So just having that discipline of staying invested. The third one is dollar cost averaging. I don't know if you've heard that term before. But we're essentially just making sure that we're consistently investing, putting money into the market. And then through the ups and downs, you're going to be, guaranteed to hit some lows, buy some more shares at that point. And it should increase your overall return over time. And the fourth one incorporates a little bit of the life insurance side. We call it the theory of decreasing responsibility. And that just tells us that over time, our financial responsibility should eventually decrease, right? Our debt load's going to come down. Our families are going to get older and be independent. And that's the purpose of life insurance, is to protect us during that time. But we also have to have a plan to get financially independent, and that involves investing. And as your assets grow and you get to financial independence, your need for that insurance is going to decrease eventually to zero.
Yeah. How is the education process on that? Because I mean, first of all, people don't generally like talking about money.
Mhm,
It's a subject I think a lot of people just would rather push under the rug. But so, what
mhm.
is that education process like, and what's it like to take a client through that?
So there's a couple of different paths that we can point people down there. So individually, of course, we're going to sit down with each client and discuss these points and go through, we usually go through a whole bunch of slides with them, just kind of educating on all of these things. But we also developed a course that we run here in our office in Lethbridge called the How Money Works course. And we have made that course completely free for anyone who wants to come and learn about money. Don't have to be a client to go through it or anything like that. We just open our doors to educate people as much as we can. And that's a 5-week course. So we do a Thursday evening for 5 weeks straight, and they learn about all the different areas of money and what to avoid and what to do.
What's the target of that? Is it kind of your average person that is just looking for some more information?
That would be probably the main target. I mean, the clients that we serve, and I believe this is kind of what drew me to this opportunity, is that we don't really care whether you have $25 or 25 million, right? We
Right.
want to provide that same education, that same value. We can help clients in all of those areas, right? We have some clients that do have very, very high net worth, that have a lot of money invested with us, and we can provide them excellent service. And we're going to provide excellent service for that 18-year-old that's just learning and getting started as well.
Yeah. Is that course all in person or is it virtual as well?
We have hybrid options, so anyone
Okay.
who's unable to come to the office or maybe isn't local, we do have an option for Zoom in there as well.
Okay. First of all, I think that's fantastic that you guys are doing that because outside of, like your YouTubes and things like that, it's tough to find those resources. But it's especially tough to find the resources when you can then turn around and ask somebody a question if you don't understand it, right? You can't ask YouTube a question. I guess you can go Google it
Yeah,
after, but it's nicer to have that face to face, whether it's in person or virtual. So good for you guys for doing that for sure.
thank you.
When you look holistically, like you talked about diversification, being, I think that was number one point or number 2 point, sorry.
Mhm.
Um, the diversification of that portfolio. So can you speak to what diversification means? I think everybody knows why it's important, but just maybe talk on that as well.
Yeah, I mean, it's, at the end of the day, as an advisor, it's my job to obviously pick suitable investments for clients and what their needs are. But we deal with, our office deals with two specific investment companies. We deal with AGF Investments, McKenzie Investments, and they are professional money managers, right? So their job obviously is to find the best places to invest, the best companies to invest in. And when we look at diversifying, typically what we teach is we want to be globally diversified with our money, right? Not just locally, not just in one sector of the economy, because market downturns are going to happen at some point.
Yeah.
And if you can get that money spread out properly, right, you're going to mitigate some of that downside risk, right? And because we're finding good money management, they can also help mitigate that as well because they're moving money in and out of those portfolios, kind of as they see opportunities, and that's their full-time 24/7 job, right?
Mhm.
So that's why I see the value in managed money like that, is because my job is to deal with the client and help them with their goals and their needs. And when you have whatever it is, several hundred clients, it's kind of hard to be watching the market every single day, right?
Yeah.
And I think all advisors are kind of in that same boat. So good management is definitely key, and spreading it out globally as well.
Yeah, and there's no end to the amount of information that's out there
Mhm.
on these companies, and a lot of these funds you're talking about, they might have 100, 200, 500, 1,000 different investments within that fund itself. So
Exactly.
it's good to have that team that's actually going and managing it there.
Mhm.
One thing that a lot of financial advisors are not able to do, and I think this is a bit of a disservice to the clients to a degree, but not able to offer alternative investments all of the time. So the
Mhm.
alternative investments being like hard assets, so real estate, gold, silver, gems, even stuff like that. Um, are there products out there that try to get more into that alternative investment that allows the average financial advisor to get clients into those?
Yeah, there definitely is. Oftentimes there'll be specialized funds that are, specific to whether it's precious metals or specific to like a real estate sector and stuff like that. So if people do want a little bit more of that specialized investment, then we can definitely add something like that to their portfolio.
Yeah.
And anything outside, like I tell my clients all the time, like it's good to have hard assets as well, right? It's good to diversify that way. It's not just globally within your investment funds, but also outside with real estate and whatever else you're looking at. So even though we can't deal with that, right, I'm not discouraging my clients to do that at all.
Yeah, that makes sense. Well,
Mhm.
and one of the nice things about those alternative assets is generally they're fairly inflation. I don't want to say inflation proof, but they certainly act more inflation proof generally than the stock market or bonds or things like that. So it's nice to have that alternative set there as well. And I think that's really been more the last 10, 15 years. We've seen that shift where that's had some importance to it
Mhm.
and certainly performed well through COVID and the inflationary periods that we've been going through right now.
Exactly right. And the financial markets have been doing good as well, right? I mean, there was even through COVID, that ended up being one of the best years in the market in the last
Yeah.
20 years, right? Somehow after that initial drop in March when everything shut down. But then it kind of came back around in 2022 and we had a negative year there. But since then, the market's been flying, and any money manager I've talked to in the last 6 months is really optimistic about the outlook for the markets. So.
Well, let's talk about the outlook a little bit. I'll preface it by saying that Jordan can't provide investment advice to somebody that's not a client right now. I can't provide that
Exactly.
advice. So if you want the advice, you got to go talk to him. But what do we see on the front here? Like, what are we looking at in the market for bonds for alternative assets?
Yeah, and I mean bonds is that's an interesting one because uh going back to 2022, that was probably the worst year we've seen in bonds in about 60 years, right? Just because of all the inflationary stuff that was happening.
Yeah.
However, since then, right, bonds have actually started to come back. And the interesting thing is that when you look at bonds and interest rates, they're typically inverse related.
Mhm. Yeah.
So as interest rates start to peak, typically bonds are struggling. Whereas as interest rates start to come down, that's when bonds really start to perform. And that's what we're seeing right now, right? Is we're kind of getting into that environment where the interest rates are going to start coming down, and as a result, bonds are performing well. As far as the outlook on stocks and equities, um, everyone I've talked to has been extremely optimistic about that stuff. I mean, obviously we've got the big tech companies in the US that are kind of dominating the market at this point. But
Yeah.
what we've seen since 2022 is that it's actually starting to broaden out a little bit. So, some of the companies that we work with, instead of trying to just capture those 5 or 6 companies that are dominating everything, they've spread assets out a little bit more, which has actually shown some really good growth, and it does make it a little bit more sustainable in the long term as well.
Mhm.
So, and another conversation I've had with some money managers is about I think a lot of people get concerned about the political side of things, right? And the upcoming election and things like that in the States.
Yeah.
Regardless of who ends up in office, um, they do still have an optimistic outlook for the economy as well. So that's something to
Okay.
know.
Yeah, that's good. That's good. Yeah, I was listening to a podcast the other day, and they were talking about NVIDIA, which is the big chip maker, who's obviously performing quite well in the age of AI because
Yeah,
everybody needs those chips. Um, but they've become such a big company. I think at one point they're the most valuable company. I think they might have slipped
yeah,
back right now, but uh, they were becoming such a big driver in the market. And then you had such a concentration of, say, the S&P 500. Such a concentration was in the top 5 or 6 or 7 companies that it's like we're not as diversified as you might think anymore. Now we're really dependent on those. So even going outside funds like an S&P 500, you might think you're really diversified in that, but you still probably want to see some other funds to continue that diversification in there.
exactly. Yeah, and I think we had this conversation too at some point, but um, again, that comes back to kind of the value of managed money,
Yeah.
especially as the economy starts to move in that direction where it's, so concentrated and in so few companies. And don't get me wrong, I think those companies are going to continue to perform and do well. But when the success of an economy starts to broaden out, right, as it is right now, it's not necessarily going to be captured in that S&P 500 as opposed to managed money where you can now get yourself spread out a little bit more and a little bit more diversified. Yeah.
Right. I'm going to put you on the spot a little bit with this question because I don't know if you'll know the answer to it or not, because I really didn't, and I need to look into it more. But again, I was listening to a podcast the other day, and I think it was Robert Kiyosaki that was talking about this on the stock market and the forecasts when you look out, say, 10 years, that he and some other people believe that there actually is a big bubble that's coming with that. And their justification from a high level made sense to me. I would want to dig into it more, but they were talking about, as money pours into the market, that's really what's driving that market up. But with the baby boomers now going into that retirement age and starting to pull their funds out, that there's so many funds that are going to be pulled out that it could actually lead to a bit of a market crash. And I think they're projecting like mid 30s to late 30s or something like that. A, have you heard that at all? And B, do you have any insight into that? And again, sorry for putting you on the spot.
Yeah, no, that's okay. I don't know if I have a really definitive answer on that. You hear a lot of stuff, right? And we've been hearing it now for 20 years or so, probably, it's a big bubble. It's going to collapse. It's going to collapse. And of course, we had the real estate stuff happen and the market crash in 08. But again, it comes down to that long-term discipline, right? Because even if it does take a big dip at some point, those who stayed invested even during that period back then, now if you look at them today, they're in a really good position, right? Where it's those that just ate those losses and pulled their money out before they could lose more, right? Those are the people that really got the big hit.
Yeah.
Right. So I think obviously fluctuation over time is inevitable. I don't think it's anything to worry about if you're behaving properly with your investments. And if you understand the long-term trend there. Do I foresee something like that happening as far as, a 40-50% drop in the market? It's hard to say, right? I can't see the future. It could happen. All that I know is that if we can coach people to manage through that, then they're going to be the ones that are successful on the other end of it.
Yeah. Well, and I think you saw that during COVID. There was a lot of people that made really good money during COVID. COVID is actually, or obviously a negative thing for society and caused a lot of harm, but there were a lot of people that were able to make money during it because the market crashes and they're looking and going, well, the fundamentals are still there. The fundamentals haven't changed on an Apple or on a real estate trust or any of those things. So when everybody's kind of pulling out at that point because you see a 30% drop, a lot of people are putting money in. And I think we saw that a pretty quick rebound and solid growth the next couple of years as well on that. Or I think that was more or less the trend that went on there.
Yeah, pretty much. And that comes back to the behavior again, right? It's when people see a market drop like that, the investors that kind of know those things are going to pour more money into the market at that point. Whereas the people that maybe don't understand as well or don't understand the behaviors that are involved in growing wealth, they're the ones that are going to be pulling money out.
Yeah.
Right.
Yeah.
So when people see those opportunities, there's going to be money poured in, and that's eventually going to cause the recovery. And they're the ones that are going to make the money. So that's what we want to do with every client is coach them. Here's how many times this has happened in history, right? It's probably going to happen again. The best plan is to just keep putting money in, right? And when it recovers, now you're going to own more shares and you're going to be much better off.
Well, and that's to your point on the dollar cost average on the investment side, right? Do you want to maybe just give a 30-second explanation to what that does for you or why to do it?
Absolutely. Yeah. It's hard to kind of do without a visual, but
yeah.
Obviously we know there's going to be fluctuations in the market. It's going to come down. Let's say, you're buying a fund that's worth $10 today, right? You're putting $100 a month in, you're going to buy 10 shares. Market drops down to 5. All of a sudden you're buying double the shares, right? So even though your assets appear to have decreased, which you're not actually taking that loss unless you sell at that point, right? So you still own all the shares you had, right? But now you're purchasing twice as many while that market's down. And as you recover, once it even gets back to par, you're actually going to have a positive return just because of how many shares you now own.
Right. Yeah. So you're continually buying, you keep that habit there. In the long run, it's mathematically, I don't know if proven is the right word, but mathematically you should come out on top by using that law of averages there.
If we look at history, right, it's always done that. Of course, we can't predict the future, but I think history can be one of our best teachers when it comes to our future of investing as well.
Yeah. Yeah. So what's on the horizon for you for whether it's the rest of the year or the next couple of years here? What are you looking to do?
We're looking to grow. We're looking, I mean, we do have a team of about 21 agents now within my office. One of them actually runs his own office now in Tabor, so he's got a team out there, and I've got a team in Lethbridge here. But with one positive, I guess, that came out of COVID is now most things can be done virtually, right? So we can expand now nationwide just within our office. So I have some people in Edmonton, I have some people in Medicine Hat, looking out in BC now. I am licensed in BC, Alberta, and Ontario, so have clients in all those areas as well. So just looking to expand and increase our reach and help as many people as we can.
Awesome. If somebody wanted to reach out to you or get a hold of you, see what you guys are doing, where would they find you at?
If someone wants to chat with me, you can go to my website, which is just jordanreiter.com. You can book a quick call with me there.
It's and then it'll be in the title here as well, but Reiter.
Correct. Yes.
Right. Okay.
And if you want more info on what our company does and things like that, you can go to primerica.com/Jordan Reiter, and you'll be able to see it all there.
Awesome. Well, certainly appreciate having you on the show today, and thanks for the insights into the market, and wish you all the best moving forward, Jordan.
Awesome, Matt. Thanks for having me.
Thank you.
You've been listening to Beyond Wealth, Success Unscripted with Matt Calnan. Want to be our next guest? Visit beyondwealthpodcast.ca/guest. See you on the next episode.